All right, class, chapter 5. Go into chapter 5, open up your slides, and I want to get moving on chapter 5. Now, your first impression of chapter 5 is there are 29 slides. Yeah, that's a lot of flipping slides. But, as you know, we go through them. There's a lot of them that we're not going to be worried about. Some of them are just informational. So I will try to run through these slides pretty quickly. Okay? So go right to number 2. A lot of the information on these are going to be just hear me out, listen to it, and put it in your head. You can take some notes if you want. I will tell you what notes to take so this way you can really condense these slides down. So in chapter 4, we brought up the word inventory. Okay? Inventory is key. It's an extremely important asset to be paid attention to. If you have lots of inventory, it's imperative that you know how much you have on hand. If you're a place like Best Buy where you have inventory that's very expensive, it means a lot of your assets are held in inventory. If people are giving out 2 TVs out the back door instead of 1, your inventory is going to be low, your sales are going to be low, and you're going to be losing money. So inventory is a very highly regulated. That's why you go into these places. There's security. Walmart has security watching people for theft, not only customers but employees. So inventory is one of the most important assets you can have. It's almost as important as cash. Okay, so these are things, inventory is things that businesses are intending to sell. That's how they make their money. Okay, going on to slide 3. One thing that you will see happen in retail stores is every so often you'll go in and you'll see a bunch of yellow tags or tags sticking out, and all the products on the shelves are pushed straight back. If you ever see that when you walk into a retail store, that means they're getting ready or they've just gone through an inventory count. And counting your inventory is very important because it gives you an idea of how much loss or theft or damage or money you're losing. They usually, Price Chopper, I think, does it every 6 months. The Smoke Shop here in Delhi does it every week. Every week, the owners of the Smoke Shop, and they own quite a few Smokers' Choices throughout New York and Pennsylvania, they have a crew that all they do is go out and count inventory. And the store managers are required to, if they've lost inventory, they're required to pay for it. Eventually, if there's too much inventory missing, the store managers are replaced. Are replaced. So when they send somebody in and actually count it, that means they're doing a physical inventory. They're counting what they have on hand. Okay? So physical inventory is when somebody actually counts what you have on hand. The other type of inventory checking is what we call a perpetual inventory system. Now, perpetual inventory system means that it's constantly being updated. Now, like Smoker's Choice and like Price Chopper, they have a perpetual inventory system, but it is good business practice to do a physical inventory count just to verify that your inventory system's working properly. Some of the keys that I'd like you to know about perpetual inventory system is it's extremely costly. It's mostly effective. It allows for less mistakes as far as ordering. So for instance, if you're down to 3 boxes of Cheerios under a perpetual inventory system, it would automatically generate an order for a new case of Cheerios. When certain supply levels are hit, it automatically reorders that product. So perpetual does have its advantages, although it is extremely expensive. Most of you guys think that going through the register at Price Chopper or Walgreens is a way to just figure out how much money you owe. Yeah, that's a way for the customer to know how much money they owe the company, but it's also a way for the company to keep track of their inventory, because every time an actual sale goes through, that item that's being sold is being taken out of their inventory. Okay, so it's very important to understand the reasoning behind it. Now, slide 4 talks about the choice of your inventory system. Again, two basic: periodic, meaning every so often, or perpetual, which is all the time. You can have a hybrid mix. It's not that big of a deal. I'm not really going to be too concerned with testing you on it. I just want you to understand perpetual is usually the better of the two, but it is a little bit more costly, and it does have more advantages than the periodic system does. Just some hints about periodic. It's taken usually at the end of an accounting period. There's really no detailed records. You just kind of say, oh, yeah, everything looks like it's here. Really, it's not what people do these days. With the way computer and cloud computing has become, perpetual is the way that almost every single business goes. So, really, it's a little periodic inventory systems are pretty much out of date. They're the dinosaurs of the business world. Under the perpetual inventory system, the biggest thing that we pay attention to is cost of goods sold. Okay. Again, I told you this continuously records the quantity and usually the cost of the individual items that are sold, but also as they're bought. It helps management know if they've got products on hand. How many times do you go into Best Buy and ask them if they have something? It doesn't show any on the shelf, but they scan the tag and they can automatically look up in their inventory if they have it or not. They can tell you what store closest to where they are has it in stock. That's all because of a perpetual inventory system. Okay? It helps them to avoid running out of things. If it starts to get low, it automatically reorders that product. Okay? So perpetual is definitely the way to go. The main thing, that's what I wanted you to get out of it. Now, as far as what we're required to do for chapter 5 with the inventory systems, it basically comes down to slide number 9. So if you go and click on slide number 9, this is the basis of all of chapter 5. Okay? And as we get down to the tail end of this course, I need you guys to understand that when I point out these slides to you, these are the slides that you have to pay attention to. These are the ones that, again, when you take your exam, I'm going to be locking the PowerPoint slides up. So you're not going to be able to go back to them. So hint, hint, maybe take a screenshot and save it as a picture on your computer so you may have certain slides that could help you. This would be one of those. Okay? So slide number 9 gives you journal entries. And these are basic journal entries that you're going to learn to do, and it's not rocket science or brain surgery. The biggest thing you have to do when you're preparing slides, when we're talking about a merchandising company, is pay attention to detail. The question is going to tell you almost word for word where to put everything. It's just a matter of you understanding why. The other thing that you need to do is, the more you make these questions related to yourself or something that you enjoy. If you are a construction major, okay, think about it in terms of construction terminology. Don't worry about that I'm talking about 30 racks of beer. Think about it in the form of, okay, 2x4s. Whatever the case may be. Closed. It's 11 o'clock.
Okay.
So think about it in terms of things that you're doing. Okay, that's going to be the easiest thing. Now you'll see that on the left hand side it talks about the sale process, meaning when you sell something. Those are the journal entries you're going to be working with when you sell a product. So if you see the word sold X something to so and so for this and that and blah blah blah. Okay, so the first one under sales process talks about sale on account. So that means you've sold something to somebody, you haven't been paid. The other thing that the merchandising company, that as a merchandising company and accountant, we have to worry about is, once you sell something, you have to take it out of your inventory. Okay, that's the key about this chapter, is paying attention to your inventory. So let's, for instance, say it's Black Friday coming up, and my son wants a PS5 tremendously. So GameStop supposedly is going to have 2 PS5s in stock at every store Friday morning. Well, if they know they're going to have 2 at every store, Are they going to let 15 people line up and get them? No, they're not going to. Okay? They have, once they sell those two, they have to take those two out of inventory, or else it's going to keep showing they have two to sell. If you don't take them out after you sold them, it's going to keep showing you have them to sell when you don't. Okay? So that's the first one, sale on account. Sale on account and sale for cash are pretty much exactly the same thing. The only difference would be if you sell something for cash, it's going to be a debit to cash instead of the debit to accounts receivable, which is what we have here on a sale of account. Now, when it comes to the merchandising, the sale process, you're going to see there's 2 entries for pretty much every journal entry. So if you take a look at the top line there where it says sale on account, you've got a debit to accounts receivable and a credit to sales. Right below that, you've got a debit to cost of goods sold and a credit to merchandise inventory, or in other words, inventory. The easiest way for me to do this problem with you, or go through these journal entries with you, is for me to actually put up a problem and have you follow along with it. Okay, and that's what I'm going to do. So this slide number 9, I'm going to hold off on slide 9. I'm going to stop the video here. I am going to go ahead and put up a problem. And that problem, I want you to follow along with me. And I want you to follow along with me while looking at this slide, because those journal entries that we're going to do are going to go hand in hand with these slides and this journal entry page that I have in front of you. Again, your journal entries are going to look very, very similar to what you see here. Okay? And again, try to relate the information to yourselves as much as possible. The sooner you understand, if you can relate it to your own lives, the better off you'll be. Being able to correlate information and relate it to yourselves will make a world of difference when it comes to this chapter. Okay? Really, chapter 5 really just goes with the slide on chapter 9. All the other slides, like 10, 11, 12, 13, all the way down, all deal with one of those journal entries that you see in the slides above. So it's not rocket science that we're going to be working on. And as we go through the problems, you'll see that these slides relate to those journal entries in our template slide number 9. So it's very important that either A, you want to follow along with the next video I'm going to post along with the assignment, or B, you could go through the next 20 slides and read them and see how it works. There may be a time where I'll reference a few of the slides just to get us moving along, but I need you guys to understand I will give you as much information as I can, and I will be telling you during the video that goes along with the slide number 9 tips and pointers to help get you through them. Okay, so this is a very short introduction to chapter 5, but again, we will keep moving forward.